channel. In this video, I'm going to be going over my dialed in strategy on what I've been working on lately. I'm doing a lot of back testing, and this is what it's going to be. So stick around. I'm going to go over it with you. And yeah, I have the dog today. So let's get right into it. So I'm going to hop over to TradingView and we're going to go on the NASDAQ chart. So here we are. You can see I've been doing some charting, but I'm just going to go over to some random day. This is in no specific order. And let's just find a New York Open. So let's just do this one. It doesn't matter which one it is. So let's just do this one right here. So first off, we use the 4-hour for trend and we look for 4-hour gaps. But in this case, we're just going to use the 15-minute because that is where the bread and butter is. I'm slowly going away from the 5-minute and the 1-minute and the 30-second and all that crap because that is not where it is, right? It's really important for me and for anyone else to just stick to the higher time frames. And it's caused me a lot of losses and evaluations to figure this out, but it's very, very important to understand where your strategy works the best. For me, it's the 15-minute with some 5-minute like integrated in. But enough talk, let's get right into it. So we're going to do these 3 right here or whatever. So what do we have right here? We have let's imagine we don't see this. So we have a nice V-shape recovery into Asia high. So we swept out Asia high, but we can see we didn't break above it. Also, we have this large 15-minute gap right here. 15-minute gap we tapped into, failed, tapped into again, failed. And so what do we have next, right? We have resting liquidity right here in Asia, internal New York, London, Asia, right? Especially if we haven't even tapped into the midpoint of the 15-minute gap, we're going to go lower, assuming. So typically when New York opens up, we manipulate a little bit of London. Today, this day, a little bit different because what do? We immediately broke trend to the downside. And so when I look for a trade, I am looking to take a 15-minute inverse to the opposite direction. So in this case, this would be a no trade day because we don't have a drawn liquidity sweep. I know you're thinking, but that's like a 300-point move. Yes, but, right? 700 points. I don't care. It's very tempting to take a trade when you see a day like this. The only potential trade I would take on a day like this is this 15-minute inverse to the downside, right? Targeting London low and targeting Asia low. Those are the only 2 targets I would have taken if I would have taken this 15-minute to the downside. And so you might be thinking, well, why didn't you take this one or one of these? Well, when there's multiple stacked 15-minute gaps, I preferably like to take the very last one because that's the most confirmed trade. And I want to leave myself the best odds so I don't get stopped out. And so when I take a trade like this, assuming I did, let's take shorts right to the downside. And whenever I see this, I want to go for wherever the stacked candles are. So it's going to be like this right there. And we can see I didn't get hit, but when I'm already up, 342 points, I'm going to be at break even, or I would have trailed my stop to like right here. I don't know why it's not showing, but I would have trailed my stop to like right here. So that's how I would have taken that trade. This stop would have been right here. So 2.3R risking, it says 148-point stop, which is insane, but you've got to realize this is a massive dump. And when I'm targeting 342 points, we got to forget about how many points the stop is and where is the best spot for price to reverse. And so if we're going to break back up, break the midpoint, and then break into this gap, especially reversing through this 15-minute gap, that's probably the best spot to put my stop. Okay, forgetting that one, let's move on to the next one. So again, we're still in a downtrend. London put in a lower high. We didn't even sweep out Asia. And so when New York opens up, what do we have on the higher time frame? Well, still on the 15, but we have this draw. I don't even know where it is. Right, so there's that draw right there that was actually from this day. But again, we didn't sweep out the high, so there's a chance where New York would manipulate back up to take those two out. But this Asia never got taken out, so London could target that, or New York could target that. But remember, we're taking only A plus setups, only 15-minute fair value gaps or inverse fair value gaps to the opposite direction. So I would be looking for this right here. I know this is the wrong spot, but whatever. I would be looking for this to the downside. And since this is basically at market open, I would not take this trade. And yeah, this is pretty choppy price action. The only other trade that would potentially work out would be a long right here. And again, like I said, I'm not really trying to trade the 5-minute anymore. It's just not worth it. Yeah, 5-minute long back to any of these internal draws, like this one or this one. But again, we sold off a bunch ever since New York Open. We sold off another 600 points. So is it the smartest move to be trading this? Not really. And plus, there's not really a good 15-minute gap around. There might be one right here, but yeah, it's not really worth it. There's like this one right here. Right, there's that one that we tap into, reject, eventually break to the downside. But yeah, maybe I took a trade that day, maybe I didn't. But again, it's based on price action, what price is doing, where's the draws, where's the gaps. Is it worth it to wait for price to come back down to then inverse back up? And where are you even going to put your stop? You can put your stop right here, but is it worth it? So moving on to this day, what do we do? Okay, we have two stacked 15 minutes at open. We come up, we manipulate to then go lower. So the trade here would have been a long off of this 15-minute to higher. So you can see we come up, we make a double bottom, SMT, break to higher. It's not the best trade because it probably only ran up for like 40 points. Damn, 132. So on this particular trade, I would have taken a long, targeting obviously New York high and London high. And then my stop would have been right here at the equal low. Let's assume that I got right here. So it's like a little 1-to-1, 0.97. And once I ran up to right here, I'll probably go to break even. Not the best. Over, let's just go to a random spot now. Okay, right here. This one. So what do we have at open? New York pushes up, manipulates London to the downside. We tap into this 15-minute gap right here. Right here. And then what? We get a clean sweep. For me, I like to take the second inverse, but this one did not really work out. Could have taken the first one because we got a nice V-shaped recovery. So first inverse, low. First inverse stops at the low, equal low, targeting the high. But that's kind of what I've been looking for, is 15-minute breaks off of draws and liquidity sweeps, V-shaped recovery to the opposite direction, specifically on the 15-minute. So again, here's another one. Market comes up, we manipulate London and tap into Asia. There's a nice 15-minute break, both right here and right here. So on this one, I would have waited for the second one because of confirmation. So confirmation, shorts to the downside, targeting, again, London low, equal lows though, and stops would have been right here-ish. And yeah, that's again a 1-to-1. And it's very important to go for a 1-to-1, 1-to-5 or more. That way you are making the best out of your trade. If you get stopped out, you can go for the next trade, 1-to-1, make your money back, and then start to grow your accounts. I just want to go over one more real quick. Let's just do this random one midweek. So again, New York opens up. We manipulate London to then go lower. So again, there's this first 15-minute right here that we break through. If you had your stops at the high, you would have been chilling. But personally, you could take this final 15-minute to lower. It's totally up to you. But yeah, it's just really about where you think your strategy shines the best, whether it's 5, 15-minute, using the 1 minute for confirmation to then enter it on the 30 to get the best entry, or you can just use higher time frame confirmations, following trend, wait for a 4-minute or a 4-hour retest at like 10 a.m. If you like the orb, if you like using VWAP, whatever it is, just make sure you have good risk management, you have capital preservation in mind, you have delayed gratification, all this stuff. And you go into each trade knowing that it could be a loser, right? You have loss acceptance before you go into your trade. You don't want to go in tilt. You don't want to over leverage. You don't want to do any of this stuff, right? Just a quick look at one of my best calendars ever was this right here. I think this was a 22 winning day streak. And it really is just base hits, base hits, base hits with a couple good winning days right here and right here. But yeah, it's just consistency is key. It's about staying disciplined with your risk and all that. I'll do one last one just to put the cherry on top. So let's just do this one right. I don't even know. Let's do this one right here. So what do we have right here? We have Asia. We have New York. And then we have London below. So New York opens up. We manipulate Asia and London, right? We sweep out, well, primarily London. So we sweep out London right there. Then we have 3 15-minute gaps. So what I would be doing is I would be waiting for this final 15-minute to get swept. So clearly we swept that with a lot of selling pressure because what do? We swept out Asia with London. There's a lot of selling pressure right here. We're in a downtrend and there's draws below. Right, where's the draws below? Well, it's going to be over here. There's this gap. So we take this inverse to the downside. We enter in shorts. Our stops are at the high. Doesn't matter how far it is. We can do equal high right here. 68 points. We're going to target London for 78 points, and then we can have runners. It don't matter. But once we hit this, right? Once we hit this, we're basically out of the trade for 82 points, a 1 to 1.2. And so hypothetically, if we're risking, let's just say, here, let's move this over to the stop. Okay, 137, $274, right? Because our risk is between $200 to $300, right around $250 because we don't want to overdo it. We want to stay consistent. So $274 to make $328 is perfect. And we got to imagine, let's say we're trading 10 accounts at once. So $328, let's just say $300 times 10, that's $3,000. Mistake me if I'm wrong. But that's great, right? That's perfectly fine. We don't need to risk any more than that. We don't need these huge winning days. This is all we need. And a lot of the times we can get lost in what it means to have a good winning day or try to find consistency. But that's all it is, guys. That's literally all it is. Base hits, good winning days, consistency, and $328, right? Over here, again, 270, 430, 500, 363, right? Sorry, I'm blocking it all, but right, 300, 185. Guys, that's all it is. It's nothing crazy. So again, base hits, follow your strategy, minus the 15-minute inverse after a 11 sweep. wait for the last one, or if it's a nice V-shaped recovery, go for the first one with your stops at the high, and that's it. One trade a day, follow your daily loss limit, lock yourself out. That's it. If you lose, that's fine. You already knew based on the screen what you were going to lose that day. Walk away, go enjoy your day. Sorry about the rant, but I just need to get this out. I need someone to listen because I've been stuck. This is how I'm going to get out. It's simple as that. It's just like a math class. They give you the instructions, you follow the instructions, you solve the equation, you move on to the test, you pass the test, you get your payout, you get your grade. That's it. So with that being said, I'm going to end the video here. Hopefully someone can find this video helpful to them. Just got to think of it as school if you need to, or anything else. I don't know. That was just an example. But I'm out of breath. So I'm going to end the video there. Leave a like, drop a comment, subscribe, and I'll catch you on the next one. Deuces.